Malacañang is not worried about the recent drop in the stock market. The palace says the dramatic developments were due to external factors that have not affected the country's economic fundamentals. Again, Ignacio reports.
Malacañang is confident that the country will still attain its economic target of 7 to 8% this year. Communications Secretary Ricky Carandang said following the dramatic drop in the stock market by 6.8%. Carandang reiterated that the fall was a result of external factors and not a reflected of the country's economic performance.
The fall in the market was due to external factors, the fund managers selling stocks across the board. And number two, it does not reflect the fundamentals of the economy, which are still very strong.
The palace official explained the biggest plunge since 2008 was influenced by the fears of global fund managers that the United States would increase their interest rates. Some investors were reportedly looking at the possible recovery of the U.S. economy.
Managers. Why is this happening? Number one, there's a concern that central banks around the world are going to taper off on the easy monetary policy. What does this mean? It means fund managers are worried that interest rates will go up. When interest rates go up, they tend to sell stocks. So they saw what they're guessing, they're speculating to some extent, and that has led them to sell stocks around the world, including in the Philippines. The other reason is, it's a little complicated, but fund managers have certain allocations. For example, 50% for stocks, 50% for bonds. If your stocks go up and your bonds go down, your 50-50 starts becoming 60-40, and you have to start unloading in order to rebalance your portfolio. So for those reasons, rather technical reasons, people began to sell stocks around the world, including the Philippines. What does this say about the fundamentals? We believe that this does not have any reflection on the fundamentals of the economy.
Central Bank of the Philippines Governor Armando Tetanco said the movements in the foreign exchange and stock markets are part of the investor assessment of global challenges. Investors from the emerging markets, including the Philippines, Thailand, and Indonesia, started selling their shares after the Federal Reserve that policymakers could consider reducing stimulus if the U.S. economy will continue to improve. The Philippines posted a 7.8% GDP growth in the first quarter of 2013 and attained the investment grade status from the international credit ratings agencies Fitch and Standard & Poor's. For the People's Television, Ignacio.